How much house can I afford in New York in 2025? I get this question all the time. 3 things you need to know. Number 3, credit score. There are loan programs that will take a 520 credit score. So the credit score itself is not as important as what is on the credit report. So if you have collections or bad credit because of medical bills, a divorce, an illness in the family, something that will never happen again, there's ways around that. But generally, you're hoping for no latenesses in the past 12 to 24 months. In the description, I put a link to all 3 major credit bureaus so you can pull your credit for free. I also put a link to a very good credit repair person I know in case you need it. Number 2, debt to income ratio. If you're able to show all of your income on a tax return, if you work for yourself or you work for somebody else, you get pay stubs, that's what we call a fully documented loan, then the ratio is something like this. 45% of your monthly income can go towards your monthly obligations that appear on your credit report and that are in your bank statement that you're paying each month. There are certain types of loans where there are alternative ways to show your income, like using only bank statement deposits or a profit and loss statement from an accountant. There are also loans for investment properties where you can use the rental income to qualify for the mortgage. Number 1, how much money will I need? Well, there's a lot of components to that. So let's start with a down payment. There are VA loans where you don't have to put any money down. And there are loans that require more than 20% down. So it really depends, but generally speaking, you can put as little as 3% down. You should speak to a loan officer to discuss the right program for you. I put a link to my website and my phone number in case you would like to give me a call and discuss. Closing costs. Of course, you want to speak to a loan officer to get the closing costs for the lender, but you also need to speak to the realtor so that you know the type of property you're buying, if there's any special closing costs there. Like, for example, on a co-op and condo, there could be a move-in fee. There could be special assessments that you have to pay when you're buying an HOA. So you need to get the breakdown of the closing costs from both the loan officer and the realtor. In New York, we use attorneys, so you have to factor in an attorney fee. Again, it's different in each area what they charge. You need a survey. That's a bird's eye view of the property where it shows the meets and bounds. And you also have to pay the prorated share of the property taxes, the water and the sewer at closing. As you know, in New York, we have the highest closing costs than in most areas because really of the mortgage tax and the recording fees. So make sure that you get a handle on that by speaking to a loan officer like myself before you go. I also put a link in the description to Judicial Title where you can fill out a few questions and pull a title bill so you'll know your expenses in terms of the recording and the mortgage tax. I hope this was helpful. If you like it, please subscribe. I post 1 or 2 videos a week on just rates, and I have plenty of videos I post that are helpful to people who are interested in the mortgage process. Have a great day, and again, I hope this was helpful.